Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 14th of January 2016, presented by myself, Phil Carr. So as always, we will keep it very interactive during the course of today's session. Any questions, any comments, do put those in to the chat area and we will go through those as we go through each of the commodity markets, analysing those. So essentially today we will be covering a review of the latest developments in the commodities market. So we'll be analysing the week's performance. The live session will be covering an overview of the commodities markets. We'll be reviewing the top trades of the week. We'll cover live market commentary and technical analysis. And of course, we'll be answering any questions you might have during the course of today's session as well. So before we get started, let me introduce you to the Gold and Silver Club. So we are recognized as International Commodities Trading Research Advisory Group, specializing in the precious metals, energies, and agricultural markets. We are experts on the commodities, from the metals, from the energies to the agricultural markets, and recognized as the leading go-to authority on commodities. We are also routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNN, Global Banking and Finance Review, and the Wall Street Journal, to name a few. Our team of experts has advised and taught technical analysis, fundamental research, and portfolio management to more than 75,000 private and institutional clients worldwide. So for further information on the Gold and Silver Club, please do feel free to go to our website, just www.thegollandsilverclub.com. So we'll take a look at the gold price right now, currently trading at $1,085 per ounce. We'll take a look at that on the technicals. We'll be going through the fundamentals today, answering any questions as well. We've had a fantastic move on gold last week, and we've seen a turbulent move on gold throughout this week, which we'll cover in a lot of detail with you. So first of all, we'll look at the top trades of the week using the Gold and Silver Club signature trading strategies. First of all, we had a lovely breakout trade from non-farm payroll on Friday last week on wheat, 170-point breakout that we've caught now on wheat as we continue to build a nice base of a very key zone of support here on wheat as we are continuing to see good follow through. Also on Monday, after the USDA report, we saw that have a further breakout for the wheat market and really capitalized on a very quick day trade there as well. So we've had a lovely move there. Brent crude oil, WTI crude oil, we've continued to remain in our sell short positions. We've continued to trail our stop losses on these trades and also take on additional positions. So Brent crude oil trade now up over 390 points, and we are also up on WTI crude oil over 340 points. So we had another breakdown of major support just last week. We've continued the momentum to the downside. We came back to the upper end of the trend channel and we've continued to break support, and we've seen oil break down to 12-year lows. So it's been a very lucrative trade on the oil market for 2016 so far. So what we'll do, we'll go over to the technicals, and of course we'll also have a look at the fundamentals as well. So I just want to bring you over to the gold market, which you can see is just hovering around $1,086 per ounce at the moment. So I'll just bring you over to an update on that in terms of the fundamentals. So essentially we've seen gold steady today, underpinned by weakness in stocks and the US dollar. So we started off the day today with a breakdown in the stock markets. In fact, we saw quite a significant breakdown yesterday, taking out weekly lows, particularly on the Dow Jones. We saw another breach of major support. Gold has steadied on Thursdays as buyers have cashed in on some of the previous sessions gains, but the metals remain underpinned by positive pressure from a drop in stock markets and dollar weakness. So we have seen the dollar pull back, which we'll have a look at shortly. We've also seen more pressure on the stock market. Stocks fell in Europe and Asia on Thursday following steep losses on Wall Street after volatility in Chinese stocks early in the year battered appetite for risk. That has helped to send gold prices to two-month highs at $1,112 an ounce, which we saw last week, though it weighed on prices of crude oil and industrial metals. And we've seen gold this week be a little bit choppy. We have seen the lower end of its trend channel find support around the 50-day moving average. In fact, we've had a pullback there just down to the lower end of the support zone. So a corrected pullback on gold after we had a significant breakout last week. The world's largest gold-backed exchange-traded fund, the New York listed SPDR Gold Shares GLD, reported a 2.4-ton rise in its holdings on Wednesday, bringing in total inflows for the year to 11.7 tons. So we've seen certainly some strong demand for gold so far the beginning of 2016 here. So at the moment we do see the potential for more upside here on gold, particularly if we hold around key support, which is sitting at 1,080 US dollars per ounce. So we're looking for gold to trade within the range of about 1,080 up to 1,100. Possibly if we can get a break above the 100-day moving average above, we could really start to build up some momentum. We had quite a large move on silver to the upside yesterday, which also helped gold along for a breakout. So what we'll do, we'll just go over to the technicals here. We'll have a look at that. You can see right now, ultimately gold, it came down, pulled back to the lower end of the trend line. You can see where we've just had a bounce just shy of some key moving averages here, and we're having a little bit of a pullback today. What I'd like to see is whether we will find support again here just at the lower end of this trend line for gold. So we've seen a significant breakout last week. We've come down for a retest of key support. If we go over to the larger time frames, it just looks like a corrective bounce here. You can see where we've actually put in a double low and a bottom here for gold over the month of December. And on the larger time frames, you can see where we've got this very strong basing formation, which is developing here for gold. So what I would really like to see in order for a continued move here is essentially to take out the weekly highs from this week, but also taking out the weekly highs from last week and making a run up to the upper end of this trend channel over Q1. So if you have a look on the monthly chart, you can see where we've already taken out the December highs. We've had very strong support going back to 2008 and also 2010 here. So previous resistance turning into support, also providing further support on the monthly chart here again, sitting around 1,000, and you can see where we've actually got this level at the moment sitting. We bounced off the 1,040 to 1,050 zone, and we've currently had a very good move over the month of January so far. So just really want to see how we are going to continue over the course of this week, how we're going to close the week, whether this is just a corrective pullback here and we are going to close the week with a rejection candle and a hammer here, in which case I would expect further momentum to the upside as we head into the last couple of weeks of January as well. So currently we're still looking good. Looks like we're basing here on gold right now. A little bit of a pullback today, but we are anticipating further moves, particularly if we get a break above 1,096 US dollars per ounce. That is really the next key level I'm looking for gold to breach at the moment. If we do get a breach above that zone, I would see quite a lot of clean air here to get a move back up to resistance. First of all, the 100 MA, and then you've got clear resistance just overhead here. Now, the other market you do want to keep an eye out for right now is the US dollar index. So if we go over to the US dollar, you will see very cleanly where we've got a pennant formation. So you can see this where we've got lower highs, higher lows here, and we're getting to a point of indecision in the market. If you look at the US dollar index on the higher time frames, you can see we've got indecision right now. We've had this going on for about last 4 or 5 weeks now, as the US dollar is continuing to build up higher lows in the chart, but also lower highs. And if we go over to the daily chart, you'll see we've got a consolidation. It is a bit of a decision point here at the moment for the US dollar. If it does break out from key resistance here, that will lend some pressure onto the precious metals. But if we break support, if we get a break below this trend line just below, that would then be supportive for the metals. We're likely to see a further rally here on gold and also silver as well. So this is definitely a decision time for gold today, and also for the US dollars. We've got a bit of an indecision candle here. If we move it over and we have a look at the silver market, you can see we had a significant breakout yesterday, came up, tested key resistance. This is actually the 50-day moving average. We've had a bit of a pullback since we've come off that zone, and what I'd like to see today is whether we are going to hold on to the gains from yesterday or whether silver is going to give back all of those gains. So you can see very clearly it's just come right up to resistance, hit that level like a brick wall, and we're just bouncing off the 50 MA. Now, in order for silver to really pick up the pace here and pick up the momentum, it needs to break and close above that zone, so 1418, and then beyond that above 1440. If we get a break above key resistance, which is at 1440, this will really open the door up for higher prices here for silver. You could see it start to base out. You've got a double bottom formation here as well, and then it could really start to build up momentum to the upside. In terms of the sellers here for silver, if we break through key support and we close below it, if we break below 1363, and if we close below that level there, that will definitely open up the door here to lower prices. So 1363, if we get a break and close below that zone, we would then be looking for potential shorting opportunities here on silver. So you can see it's really been channeling for the best part of about 4 to 5 weeks now. We just see silver ricochet between support and resistance. A little bit indecisive again today, just finding some resistance off the 50 MA. So I'd like to see how this is going to close the session, the UK session today, and also the US session later on today, to see whether we will continue within this supportive trend channel. So if we're just really moving, ricocheting between support and resistance here. Now, the other markets which are definitely worth having on your radar at the moment are wheat and also corn as well. So wheat, we did get a breakout earlier on this week, just after the USDA report. We got a nice move, breakout towards the upper end of the trend channel. Again, we've come into resistance overhead of the 50 MA. We're getting a little bit of a pullback, and what I want to see here is whether we'll get some rejection around this zone. Now, to a certain degree, that will be dependent as well on the US dollar. If we do get US dollar weakness continue this afternoon, if we continue to break down, this will be supportive also for the grain market, and we could see some support around the lower end of this trend channel. So I want to see whether we're just going to continue to work our way out from the lower end of this zone. Now, if you go over to the higher time frames, definitely worth paying attention to on both wheat and corn. So you can see here, if we go over last couple of years on wheat, we are bouncing off a very key level of support here at the 457 zone. So several times we've come down to that level, produced really nice rejection candles, and they've had good follow through, where we've come back up to initially the 497 level, and beyond that the 530 level. So we're looking to see whether we'll get good follow through, whether we'll come up to this next level of resistance above at 497, and then beyond that the 530 zone. So these will be the next key levels which we'll be targeting for longer term positions. You can see there's a lot of buying just below here, 450 zone, very supportive on the higher time frames. So I would anticipate the potential for another move higher here. You have to be a little bit patient with the grains here, let themselves work out. They tend to be a little bit volatile over the course of the day, but ultimately if you stick to the higher time frames, you can see they're very predictable and they move really well between key support and resistance. Now, the same can be said here also for corn. If we look at the corn market, you can see on the higher time frames, we've had very strong rejection again from the 350 zone. So you can see we've had a rejection candle form last week. We've come down, retest the supportive layer this week at 350. We've had a nice bounce off that zone, and now we're looking to see whether we'll get follow through. Now, if we do break, and if we were to break and get a close below this zone, then we would be looking to sell short this market. We'll be breaking a major level of support, and we can look to then take it down to the next major level of support here, which is sitting about 300 points lower at 318 zone. But whilst we maintain this supportive layer, there are some good opportunities for buying here at corn, just waiting for a further confirmation really on both the daily and the weekly charts just at the moment on the grains here. So that is another market. I would keep an eye on both wheat and corn. They're definitely markets to have on your watch list here as we progress into January, and certainly want to keep an eye on how those close the weekly. Now, another market which is definitely worth having on your radar here is natural gas. So natural gas, we've got the natural gas storage inventories coming up at 3:30 London time, which is the next 2 hours and 15 minutes. Now you can see here, natural gas put in a significant rally over the end of December, beginning of January as well, but it's starting to turn. It's come all the way up to a critical level of overhead resistance here, and it's come up to the 100-day moving average as well. It's starting to break down, and I would really look at this as, particularly if we break through this supportive layer at 2.179. I'm waiting for the natural gas storage inventories to come out today. We'll be having a look at some live trade opportunities right off the natural gas storage inventories, which will come up in the next just over 2 hours, to see if we get a breakdown in price. We also want to see a break and a close below this supportive layer. If we do get a break and close below that, you've got a nice V-shaped reversal pattern, and there is a lot of clean air to break down here for natural gas. So for me, this is definitely one to have on the radar as well if we are starting to roll over here. If you look at the weekly chart, you can see very clear overhead resistance here. We've already taken out last week's lows, and for me, there's the potential to ride natural gas back down to the lower end of its support channel. Now we can just take a quick look at the fundamentals here for natural gas, where we've got warmer than anticipated weather. So we'll just bring that out. Okay, good. So US natural gas futures edge higher on short run. Let's just bring that out. We can have a look. We've got the natural gas storage inventories coming up over the next 2.5 hours. Okay, we can see here in early estimates, analysts forecast utilities pulled about 178 billion cubic feet of gas out of storage during the cold week ended January the 8th. That would be the biggest withdrawal since last March. That could certainly have a big impact over the course of today. Technically, you can see the details just below here. Technically, it is looking quite weak here, but we do still need to wait for confirmation. Natural gas has had a very big move over the first part of January so far, the first couple of weeks. But if we do see a technical breakdown in price, which also correlates with the natural gas storage numbers which come out this afternoon, you can see the potential here for quite a strong breakdown in price. We need a little bit more confirmation, a break below 2.179 and a close below that level. Then I'm looking to start adding onto our sell short positions here for natural gas. We'll look to take advantage of that move to the downside. Now, in terms of some of the positions that we've got open at the moment, so we get a lot of questions just in terms of our open positions that we've got running right now. So you can see, let me just bring this out for you, just take a look. We've had some really nice gold trades over the last week as well. So what I'll do, I'll just bring those out. You can have a look at some of those positions which we've had running, particularly on gold since the start of January here. Also longer term oil positions that we've got running as well. So let me first of all just bring you out. Let's have a look at our gold position, which we've continued to trail. Okay, so you've got, this is our gold position, which we've been in since last week here. So you can see where we've got gold, where we've entered into a box setup. So this was originally at a breakout of 1,075 US dollars per ounce. Nice little basing formation, nice break, initially hitting our profit target at 185 points there. And then we continued to rally gold up last week, 280 points, and then at its peak last week we came up to 100 MA, 330 points, banking some profits at that zone before we've seen a bit of a pullback around that level. So it's been a really nice breakout over the last week here. Also, oil is definitely one, get a lot of questions on oil too, so just to cover that for you as well in terms of how we've been selling short oil really since the OPEC meeting from the beginning of December in 2015. Let me just bring that out to you. You can just see some of the positions that we've personally had here as we've continued to see a huge breakdown on the oil markets. We've been in this trade actually on a longer term position since the 11th of November as we continue to ride. And then we had further confirmation on the OPEC announcement as well. So if you have a look, this is our initial entry here based on the weekly. So we initially entered into this at 46.15. So this was going back to the 11th of November. You can see this is where we had a break of key support. So again, once you break key support and you close below those levels, it really starts to pick up the pace of any major trade, whether that's a longer term position or a day trade. So you see, as we headed into December, we were up 345 points. We secured 100 points at that point in time. As after the OPEC meeting, we were then 545 points in profit, hitting 7-year lows. So we continued to sell short. You can see here as the price continues to break down, up 640 points on the 10th of December. As we continue to move into December and now January as well. Now we're into, well, this was last week, we were up 1,100 points on the trade, and we've just continued to ride this as the markets continue to break down, and we've hit 12-year lows here just earlier on this week, and we're currently up 1,485 points on this trade. So you can see we've just managed this as the oil market has continued to break down. All our setups, which are sent out to all of our traders at the Gold and Silver Club, the trade management of those traders, they will get email notifications. So just very transparent, the trades that we're in, when we're entering, where we're putting our stop loss. And essentially, if you would like to find out more about that, I do get a lot of questions. We'll come back to, I'll go through the analysis as well with the other metals and also the energies very shortly. But just to answer some of the questions I get on this, yes is the answer. You can get our trade setups, our alerts, which we produce every single trade setup which we're taking. You can have access to those. So essentially, all you want to do is just go to www.theprivatetradersclub.com. From there, you'll see a breakdown of everything that is included. So you get access to our private live trade setups. So these are sent out by notification on email. What a lot of our traders like is, I'm sure you can relate to this, a lot of the time you'll be waiting in the market. You might be looking at your screen, waiting, sitting there for a setup to occur. Sometimes you have to be very patient. It's quite nice. A lot of our traders like the fact that they'll get alerted to any new trade setups. We're constantly in front of the markets. We're picking out the best A-grade setups available out there. And each time there is a new setup, the exact entry, exit, take profit, those get sent out to all of our traders, able to then check in on the forum, look at the overall setup, look at the entry, the exit, and the trade management of the trade is also updated. You get a notification when the trade gets triggered. So it really helps you immensely, particularly if you're not familiar with trading the commodities. If you're just starting to learn to trade these markets, it really helps you massively just to have that additional confirmation and confidence in your trades that what you're seeing lining up is also triggering a setup on our side. We also provide a week ahead trading plan, which again, a lot of our traders like, because you're able to watch this at the weekend. Is half an hour, very high quality analysis for the week ahead. So it goes over all of the positions that we are currently in. We also talk about higher time frame setups as well as lower time frame setups as we head into the new week, any major news announcements, any new setups that we're going to be taking, and we do the full rundown of all of the commodity markets, and really prepares you very well for the week ahead. So if you don't have much time, you just want to check in at the weekend, check in all the trades, see how they're doing over the course of the week, you can literally do that half an hour on a Sunday. Just go through our week ahead wealth plan and you've got everything that you need set up for the week ahead. We've also provided our live trading rooms throughout the week where our traders can join us. They can see the exact trades that we're taking. You can get all the entry, exit, take profit levels. We go deeper into the analysis on that. We're utilizing our indicators. You can get access to all of our indicators, the strategies that we use at the Gold and Silver Club. All of those are available actually via the Master the Markets trading course. So if that's something which you would really like to take your trading to the next level, you can go through all of the modules step by step, from the fundamentals to the technicals to the trading strategies that we use, the indicators that we use, or how to set up your charts, how to set up your indicators, how to know which are the major news announcements to trade, how to trade longer term positions, swing trades, how to trail your stop losses. It's all there module by module in chronological order. And of course, as always, you'll get high level of support, VIP email support line to any questions on the trading course, technical setup, or market related queries. You'll have access to that. So again, that's just at www.theprivatetradersclub.com. Okay, www.theprivatetradersclub.com. All you need to do when you're on that site is just go down to the bottom, enroll here, and from there you have an application form. Once you fill that application form, click apply now and we'll get in touch with you ASAP. So I get a lot of questions on that, and that is exactly how you do that. It's just www.theprivatetradersclub.com. I can come back towards the end on that if you've got any more questions and just show you exactly how to enroll if that is something that you'd like to really take your trading to the next level. Okay, fantastic. So going back to our technical analysis here, just having a look now at natural gas. You can see right now, natural gas is looking good. It's starting to break down. So first of all, it's breaking below key support. You've got a 50-day moving average here. That's quite significant. So look at all the support that we've had on natural gas over the last week or so. Around this 50 MA has been significant. It's breaking below that. You've also got a rejection candle yesterday. So this in itself is a setup, but we've got natural gas storage inventories, which can be quite volatile, a bit of a wild card. So we really want to wait for that natural gas storage inventories to pass or trade it directly off the natural gas storage inventories. Then if we were to get a break and a close around this zone right now, particularly below 2.179, this then gives us an opportunity to go for a sell short. So you can just look at the risk to reward here, right? Just as an example here, what we could look at here in terms of a break of this level, this is 1-to-1, this is 2-to-1, taking it back down to key support. So natural gas, for me, is definitely a market that you want to have on your radar this afternoon. It does look like it is setting up for a potentially good sell short opportunity here. So do definitely just have that on your radar as well. Okay, fantastic. So with that, I'll just move it along and we'll go over to the energy markets now as well. So bear with me as I bring those up. We'll also just bring up the chat if there have been any additional questions. Just hold on whilst we bring that up for you. Okay, fantastic. So we'll just bring it over to the energy. So first of all, we'll have a look at Brent crude oil, then we have a look at light sweet crude oil. Now, what I would say at the moment on both Brent and WTI crude oil, they're quite extended on the daily. Now, we've got longer term positions on oil, which we're still managing, trailing our stop losses on those. So we do still have a short on oil, but I'm not taking additional day trades just yet. I want to wait for a retracement back up to resistance here and then get back in short. So essentially, I'm looking to sell into rallies on confirmation. I do need that confirmation, but we've got longer term sells on oil at the moment. If we get a rally back up to these key moving averages above, then I'm looking to sell back into any rallies here on Brent right now. So I'm keeping a very close eye on that. Want to see essentially a retracement back up to resistance. You can just draw that on really cleanly, just overhead resistance channel. You've got a support and resistance channel on the chart there, and we just like to see a further retracement back up to resistance in order to get back for a sell short again. So I just want to see another move higher here, another leg higher before getting back in for a sell short, move back up to resistance. That's what I'm looking at on Brent at the moment, and also on WTI crude oil. Same sort of situation here. I'm looking for a retracement back up to the upper end. You can see this area I'm targeting at the moment, a move back up to resistance, overhead resistance, and looking to sell into rallies on confirmation to get a better position for an additional day trade here. So not looking to catch a bottom here of the market just yet. I am anticipating that over the next month we are likely to form some sort of a base and a short covering rally here. So there could be some opportunities as we get towards the end of January, particularly into February, is one to look out for some potential short covering rallies here to the upside. But right now, more in favor of a sell-off, but only selling into rallies. It is getting a little bit overextended. Now, again, if we just go back to the fundamentals on oil here and we have a look at the energies and overall the breakdown that we've had oil breaking down to 12-year lows as Iran supply looms here. So the key headlines again: Brent falls to lowest discount to WTI since November 2014. UN likely to confirm Iran compliance with nuclear deal on Friday. Projects worth 380 billion scrapped and postponed. Oil prices steadied on Thursday but remain near 12-year lows on the prospect of Iran unleashing its oil on an oversupplied market and few signs of improving demand in a fragile global economy here. So we've seen Brent crude oil, the global benchmark, dropped as low as $29.73 a barrel. So we finally broke through $30 a barrel. West Texas Intermediate or WTI crude oil sitting around $30.75 an barrel here. So we've had some significant moves so far in 2016 here. Barclays said it has raised its estimates of Iranian oil supply and on speedier than expected lifting of Western sanctions. Analysts at the bank said they now assume that Iran will produce almost 700,000 barrels a day more in the fourth quarter of 2016 than over the same period in 2015. So we've got a lot of bearish factors still in the oil market right now. As I mentioned there, we're looking still to be positioned short over the next couple of weeks, but as we come into February, seasonal factors will come into play there, and you just need to be a bit mindful of some potential short covering rallies there before we potentially head lower again this year. So ultimately on oil right now, being a bit patient, waiting for a retracement. You can see we're getting a bit of a retracement, not trying to be a hero here and pick a bottom just yet on oil. Really need a lot more confirmation before we do get a full-on breakout here on oil before we can look at going long, but might not have to wait too long as we come into potential February rally here as well. Now, moving over to the other precious metals, just take a quick look. Also, we'll have a look at platinum and palladium. So platinum did get a reasonable move to the upside yesterday. You can see it's giving back some of those gains at the moment. You've got a lot of overhead resistance here. We're still holding on to a major supportive channel on platinum at the moment, sitting around 823.02. So we want to see whether that zone of support does hold. If we get a retest of it, again, same situation as silver. If we break and close below that level, that would open up the door for sell short positions. Same thing that we've had with oil here. Once we broke and closed below major support, really opened up the door for significantly lower prices. You can see where platinum has been channeling really over key support here for a while. Hasn't really managed to get a full-on rally, although last week it looked likely that we might get one off non-farm payroll, but it didn't follow through, and we've just retraced back here to key support. So we're looking to see whether we'll break and close below that level. You can see we're hovering just not too far away from key support at the moment. Now, if we move it over to have a look at palladium, you can also see here where we've come right off the lower end of, again, this supportive channel. We've been quite oversold here on palladium over the last week or so. Had a retracement back up to key resistance. Now, at this point, there's no new setups for palladium right now. I want to see whether it will continue to break down. Again, this is the same move I'm looking at for platinum here. If we get a break and close below support, platinum is likely to open up the door here to lower prices too. So I'm keeping an eye on both for potential sell short opportunities here. But right now, palladium is just hovering around the 481 level. So I want to see whether it will form a V-shaped reversal pattern, potentially retest 520, or if it will break down again, to really be decided later on this afternoon. If we have a look at gold here, gold is forming a little bit of a corrective bounce here. So I want to see, again, whether this zone will hold. If we do see gold break above 1,096, I'll be looking again for a fair amount of clean air, taking it back up to last week's resistance channel. So that is one to keep an eye on, keeping a very close eye on gold at the moment. It's pulled back a little bit in the early part of the session today, but gold really didn't get going yesterday until the US session. That's when we really started to see the momentum pick up to the downside. Again, looking at the dollar for direction here as well for the precious metals. So if we just go back to the US dollar index, you can see nice little doji indecision candle. If that gets supported, breaks resistance, that will lend some pressure onto the metals. But if it breaks through support here, if we get a move lower and break below this trend channel, that would also open up the door for a bounce higher here, particularly for gold. So that is also one to keep an eye on. I'll just finish it off. We'll have a quick look at copper here. So yeah, copper again, same situation with oil. I'm looking for a move higher here. First of all, I want to see a retracement back up to resistance. If we get some sort of, it did close below major support. If we get a rejection around this previous level of support, term resistance, we'll be looking for a selling opportunity here on copper as well. So we'll be alerting all of our traders to that if we form rejection around that zone as well. And again, natural gas, you can see it's breaking down quite nicely actually already. So I'm waiting just for a little bit more confirmation this afternoon. Natural gas for me is going to be one of the top markets to look at over the course of today, as well as we're also looking to gold as well for some potential setups here as we continue to head into the US session. So again, natural gas storage inventories will be coming out in the next 2 hours here. So that is when we are likely to see potentially more momentum to the downside here for natural gas. Now, quite a few of you joined us a little bit later, I believe, in the session. So what we want to do is just do a summary. So what I'll just go out now and take any additional questions at the moment. If there are any additional questions, do post those into the chat function. Then what we'll do, we'll just do a quick summary here as well. Okay, so in summary, what we are looking at in terms, first of all, the precious metals here, you can see gold. If we go out to the higher time frames, we've had a corrective pullback. We've actually moved 50% here. If you take the swing low from December up to swing high of January, you've had a 50% corrective pullback on gold so far. What we want to do is see whether this level will hold today. You can see we've got underlying support. We've got major trend channels just below the gold market at the moment. If we just add also to that just our Fibonacci levels, you will see where we've actually bounced right off 1,079 US dollars per ounce. This is the 50% pullback from the swing low of December up to the swing high of January. So this looks like a corrected bounce at the moment. We want a little bit more confirmation. I'd like to see a breach above yesterday's high in order to get follow through here at the moment. If we get a retest of support, gold needs to hold on to 1,080 US dollars per ounce. And hold on in terms of the close. It can breach below that, but as long as it closes back above it, it's okay. But if we do get a break and close below 1,080, you'll start to see momentum pick up to the downside. Silver as well is coming back to a major area of support. It had a big breakout yesterday, came all the way, retested the 50-day moving average. We're still moving between support and resistance. So 1363 providing a lot of support for silver. 1441 is the key zone of resistance. A breach of that zone, a break and close above it, we could really start to see the momentum pick up to the upside here for silver. So keeping an eye on that level. We're giving back some of the gains from yesterday as we come into key resistance. It's going to be important to see how silver closes over the course of today. Looking at platinum and palladium for correlation, we saw a big move to the upside on palladium and also platinum yesterday. Again, bit of indecision here. We either want to see whether we are going to get a corrective V-shaped reversal pattern here and potentially build up a bit of a base here for palladium, or whether palladium is going to continue to break down after it's broken major support at 520. So again, monitoring these very closely this afternoon. Platinum as well came back down to key support yesterday, had a bit of a breakout to the upside, just came back to retest. You've got previous support term resistance here going back to the 852 zone. So want to see whether we'll continue to maintain above the 823 zone. If we do break and close below that level, it will certainly start to lend some weakness here to platinum, and we could look for some sell short opportunities if we do break through that supportive zone. So keeping a very close eye on that. Natural gas storage inventories coming up in the next 2 hours or so. Essentially, we're looking to see whether we'll get a break below key support here at 2.179 and close below that level in order to open up the door for further prices. You've got a lot of clean air for a breakdown here on natural gas if it does confirm this V-shaped reversal pattern here. If we get a break of the neckline here, close below it, there's some good opportunities here. Definitely natural gas, have that on your radar today. Both Brent crude oil and WTI crude oil, we continue to be in a longer term swing sell short position or core position here on Brent since November, which is up over 1,485 points now. But at the moment on Brent in the short term, we're looking for a relief rally here back up towards the upper end of its resistance zone, and then really selling into any rallies on confirmation. It is overdue a bit of a rally here to the upside, a bit of a pullback. Not looking for a bottom to be put into oil just yet. Really would need quite a lot more confirmation in order to see a bottom put in the market at the moment. So really still looking to sell into rallies here for day trade. Same situation really with WTI crude oil. Definitely anticipating a retracement. If we come back up to this overhead resistance zone, again, make sure you've got your trend channels just overhead here. You can see if we get a move back up to the highs of the week here and we get rejection around those zones on the tighter time frames, that can lend also another opportunity to go short here into the market. You can see these previous rallies I've identified here on oil. Each one of those has been a failed rally where you've had these rejection candles form at the lower end of these zones. Often they're just getting sold into. So just be a bit careful here. If you are looking to try and pick a bottom for oil, we really need a lot more confirmation before going long that market. Moving over also to the grains, looking out to the larger timeframes here for both wheat and corn, especially on the weekly timeframes. So look at key support on wheat. You can see we've had a good support around 455 to the 457 zone. So ultimately looking to see whether we get good follow through over the course of this week into next week. Typically it takes about 2 to 3 weeks to work its way out and get back up to resistance. So 497, the next key resistance, beyond that 530. So wheat and corn, looking at the trade opportunities on the higher time frames on the weekly. Again, very key support also for the corn market sitting at 347.92. And bear in mind the US dollar index quite indecisive at the moment for the US dollar. On the daily chart, you've got a pennant formation, a doji forming so far. So I want to see whether we'll break support and break the trend channel today, which will provide support to the precious metals, or whether we'll get a breakout of resistance to the upside here, which we would then see put pressure on the metals, particularly gold and silver, if we've got a breakout above resistance here. So we're in indecision mode at the moment with the US dollar as it continues to consolidate right into the apex of this pennant. So for me, that is definitely one you want to watch. So that's really the summary of the major trade opportunities that we are looking at as we head into the US session this afternoon. As I mentioned before, to recap, if you would like to take your trading to the next level with the Gold and Silver Club, you can have access to all of our trades, the trade alerts that we send out. Our traders absolutely love that. The alerts get sent out to your email. You get those notifications when a trade has been triggered, when there's a new trade. Those include the entry, the exit, the take profit of all the trades that we're taking, as well as the management of those trades. You also get access to the week ahead trading plan, which is where we prepare all of our traders for the week ahead every single weekend, which comes out to you on a Sunday, so you can really get prepared for the markets and you've got all your preparation done. We also provide live technical analysis videos throughout the week. So as well as the trade setups we're sending out, those are also backed up by our live trading rooms where we talk through the trade. So if you do want to take your trading a little bit deeper, we actually talk through that setup, why we're taking it, why we position our stop loss in a certain area, our take profit level, where we're getting into the trade, what strategy that we're utilizing, what indicators, what fundamentals that we're using to build up our A-grade setups there. So you get access to the live trading rooms. Those are also recorded if you want to rewatch them afterwards in your own time. And of course, you get access to the Master the Markets training course. So with that, all of the modules are laid out for you there, module by module. You go through our strategies step by step, the indicators that we use, how to set up your charts, the strategies we use for news trading, for longer term trading, for swing trades, how to modify your stop losses, how to follow trades via trailing stop losses when you're in a winning position. We go into a lot of detail on fundamentals there as well, and seasonality, and everything really to give you a good edge within your trading. That can again all be watched in your own time, each module step by step in chronological order. And of course, you get VIP email support line. So any questions, comments you've got regarding any setups, any trades, you're supported every step of the way. So again, that is just on www.theprivatetradersclub.com. Essentially, if you are ready to take your trading to the next level on the Private Traders Club, again, just www.theprivatetradersclub.com. Membership is by application only, so you will just need to go to that, fill out the application form, as I mentioned, during the course of the session. And once that is completed, we'll get in touch with you ASAP. Okay, fantastic. So at this point, I don't think there are any more questions, guys. So what I do, I will hand it back here to FX Street. If there are any additional questions or comments, we'll certainly go through those with you. And I wish you all a profitable day's trading. Okay, thanks, guys. Have a profitable day. Cheers.